All right, so we're live here at the Hotel Cafe in Los Angeles. I'm Nick Harcourt, and the ETF.com Awards are about 25 minutes away. So we're going to tell you a little bit more about what's going on and what we're doing here. I'm Nick Harcourt. This is Luca Closer.
Hi, thank you for having me. My name is Luca Closer, and we're here to play a couple of our songs, and I hope you enjoy. There's a limit to the way you treat me. Must be dreaming. Oh, no. Won't deny it defeats me. Take it easy. Oh, glad you're doing fine. While my feet can't touch the ground. I saw better days before you came my way. This doesn't get better with time. I'm standing on the ledge alone tonight. This doesn't get better with time. I thought you said we'd always be alright. I still crave that feeling. I wish you'd come around, leaning forward, but you still bring me down. I'm giving you too much attention. I wish I'd make it through, ooh, getting closer, but I can't forget you yet. Glad you're doing fine. While my feet can't touch the ground. I saw better days, ooh, before you came my way. This doesn't get better with time. I'm standing on the ledge alone tonight. This doesn't get better with time. I thought you said we'd always be alright. Who do you love? Oh, who do you love? Oh, who do you love? Oh, who do you love? It's not me. Oh, who do you love? Oh, who do you love? It's not me. Oh, who do you love? This doesn't get better with time. I'm standing on the ledge alone tonight. This doesn't get better with time. I thought you said we'd always be alright. This doesn't get better with time. Yeah, better with time. Let you know tonight. This doesn't get better with time. Yeah. I thought you said we'd always be alright. Oh, who do you love? On the ledge alone tonight. Oh, I thought you said we'd always be alright. Oh, who do you love?
All right, fabulous. Luca Closer, I'm Nick Harcourt, and we've got the ETF.com Awards about to happen, but a little musical interlude before we start things off. I know you're going to play a few songs for us, but I want to ask you a little bit about yourself in between, if that's all right. So we met over Zoom, I guess, what, 3 or 4 months ago, something like that?
COVID introduction over Zoom.
Yeah, we did, and that was a lot of fun. It's really good to actually see you in person, and thanks for the guys coming in as well. You got an interesting background. Before we get to the next couple of songs, I know that you live part of the time here in LA, and then part of the time in Luxembourg, right?
Yeah, I mean, I do live here mainly, but my family is from Europe. Am I supposed to be talking into this mic?
Yeah.
So, and so I spend a lot of time out in Europe. Went to high school in Germany, and now because of COVID, obviously when work slowed down, I was able to spend a lot more time in Luxembourg.
Yeah.
Yeah, it's amazing to have both sides of
Yeah, very fortunate. And I want to
Yeah.
talk to you a little bit about your songwriting as well. So, when did you first start writing songs? Did you play an instrument first? Did you sing first?
Yeah, I started with piano. My parents had one caveat about our upbringing, which was you have to learn an instrument. And I picked piano. Wasn't the best at practicing it. I should have practiced more. I'd probably be much better now. But I went to college for film, and I would just lock myself in my dorm room and make, I guess at the time I was making songs, but it felt more of like a hobby. And then it became an obsession a little bit, and now I'm here. But to answer your question, I started writing songs, lyrics, melodies, at 18, so it's kind of fresh.
Right,
but
right,
I guess
right.
I was writing little piano things before that, so.
So maybe you and I can play a song on the piano
Yeah.
before we wrap things
Oh,
up.
definitely. Some jazz, just to segue out.
We'll just scat a little bit. I'm going to let you guys play another couple of songs, and then we'll come back and chat a little bit
Amazing.
more. So we're live in Hollywood at the Hotel Cafe. The ETF.com Awards will kick off at 2:15 here in Los Angeles, so whatever the time difference is for where you are. But in the meantime, Luca Closer.
Thank you. So this next one's called Sweet 16, and the songs I'm playing for you guys today are all out, in case you're bored and want to check it out. Happy sweet 16, he quietly said to me. We had a quick smoke, lonely at the record store. Jeff breathed out to start our favorite song. Look at me proud. We walked the aisle down. I remember fondly the satin dress you bought me for our wedding day in darling May. Ooh, she's dancing to our song. Ooh, she played this all alone. Don't you think of me? Don't you think of me? Honey, did you know you got on Maddie's low? And now you're sleeping with him, fucking up my rhythm. He wasn't singing blues with me before. Ooh, ooh, she's dancing to our song. Ooh, she played this all alone. Don't you think of me? Don't you think of me? Ooh, ooh, she's dancing to our song. Ooh, she played this all alone. Don't you think of me? Don't you think of me? Now I'm dancing alone. You know it's hard to let go. Ooh, ooh, she's dancing to our song. Ooh, she played this all alone. Don't you think of me? Don't you think of me? Ooh, ooh, she's dancing to our song. Ooh, she played this all alone. Don't you think of me? Don't you think of me? Ooh, ooh, don't you think of me? Don't you think of me? Thank you. This next song is called Secret Love. Wait like who's driving more holding late nights. We're fighting. He said I'm not fake, I'm just trying to figure it out. Break line, she's hiding, holding him tight. Oh, they're hiding. He got too awake now. He's trying to figure it out. He said you would wait for me, but you weren't even there. You said you would come with me, but you don't even care. You're now you're a fool to me. Oh, you're so unaware. Should I have stayed alone? Secret love tears me apart. Ain't enough for you. Secret love fucks me apart. Ain't enough for you. Waste time, so blinded I can't even wait. He's high and there's nothing he could say now. I'm trying to figure it out, yeah. You said you would wait for me, but you don't even care. You said you would come with me, but you weren't even there. Yeah, now you're a fool to me. Oh, you're so unaware. Should I have stayed alone? Secret love tears me apart. Ain't enough for you. Secret love fucks me apart. Ain't enough for you. Secret love, yeah. Don't act like you want me, love. Secret love, don't act like you want me, love. Don't act like you want it, love. Yeah. What am I fighting? What am I fighting for? What am I fighting? What am I fighting for? Secret love tears me apart. Ain't enough for you. Secret love fucks me apart. Ain't enough for you. Secret love, hey, don't act like you want it, love. Secret love, don't act like you want it, love. You. Thank you. Let's do it again.
Again, I'm Nick Harcourt, and I'm here in Hollywood at the Hotel Cafe for the ETF.com Awards, which are coming up in about 12 minutes. But we wanted to introduce you to a fabulous, I should take this off, right?
Sweaty new artist.
A sweaty new artist right here in Los Angeles, Luca Closer. Do you want to introduce the band?
Yes, this is Zachary Tabori on the drums.
Hey, Zach.
Also has an amazing artist project of his own. This is Josh Stubbe on the computer. Running every track you hear.
And so much more.
And so much
There's
more.
a whole bunch of cool stuff
The
going on.
tech
over there.
whiz over here.
So we talked, as people are just coming in now to the awards, they probably missed our introduction maybe, so I just want to just very quickly again say Luca Closer is based here in Los Angeles, but she's also had the good fortune to actually travel backwards and forwards to Europe a little bit. As a songwriter, before you go back to music, tell us a little bit about your process of songwriting. You said piano was your first instrument.
Yeah, correct. Oh gosh, it's different every time. For me, it either starts with lyrics first or lyrics absolutely last. I produce as well, so sometimes it's just me making a beat or a track until I feel inspired by it, and then I'll tend to just scream over it on a microphone until I find melodies that I really like. And if I'm writing whilst going through something, I'll most likely know what I want to say, but oftentimes
A lot of my demos or the writing process ends up having, no lyrics for months even. But then there's songs like my first single Time that I dropped that kind of just came out and happened, in 30 minutes. And it's nice when those happen, but I feel like they don't happen enough.
So when did that song came out? That was your first single, right?
Yeah, that came out in 2018, I think,
Right.
by now, which seems like a century ago.
And then a little bit of time in between then and the first thing that I heard,
Yeah.
which was Lie to Me.
So I dropped Time, then I dropped a song called Sweet 16, then I dropped a song called Secret Love,
Got it.
then the song You've Been So Kind to Support,
Sure.
Lie to Me. But everything was so new to me that when I dropped Time, I didn't even know yet if I really wanted to pursue the artist thing and being the face of it. So I would, I was doing like a one song a year type thing.
So
Whoever's still sticking around,
Yeah.
they've been very patient.
waiting for music, one a year. Why were you trying to figure out if you wanted to step in front of the microphone?
I mean, my brother was always the one in a band, and he's incredible and talented. So I was like, I'll let him do that.
Right.
And it was really, I never thought I was going to do it. It was one of those things. I never sang. I never, did anything remotely like this. The only singing I did was like in a choir where no one could hear me,
But
and I
you've
made
been-
sure to be really quiet.
So you've been writing these great songs. I mean, when did you decide that you needed to,
Thank you.
get out from behind the computer and the bedroom and
I think it was just,
last week?
nowadays you're enabled to upload anything you want in a matter of minutes
Right.
onto the internet. So it was one of those nights where I was like, you know what? I'm just going to drop this song now, see what happens. And then it was like, oh, okay, wow, like, this is fun. It's fun to get recognition on songs you write, As little as that recognition is, it's always amazing.
And obviously you haven't been able to perform out for a year like any
Yeah.
other musician in the
No.
world.
Yeah, no, I mean, it's a first world problem, but I definitely miss it. Like,
Sure.
It's so good to be back on stage and feel the bass in your stomach. And
Right.
It's been so long, but I mean, I hope the world gets back to a place where we can all pile on top of each other and listen to
coming.
live music.
Yeah.
I hope so.
So I know you've got one song left for us, and I'm thinking about the amount of time that we have before the awards start. Do you think you could do the first song for us again at the end?
Absolutely,
Yeah? So then I'll just leave you guys to it to play out with the last two songs. Is that cool?
Great.
All right.
Amazing.
Yeah. So Luca Closer is our guest, and we're in studio. We're in actually the Hotel Cafe here in Los Angeles for a live broadcast. The ETF.com Awards are going to be starting whatever time zone you guys are in. It's 2:15 LA time. That's all I know. I got to stick on the Pacific time zone, otherwise I'm going to be screwed. But 5:15 East Coast, and then I guess wherever you are in Europe or Australia, whatever time of the day it is. Thank you for tuning in. ETF.com Awards are starting at 2:15, which is about 9 minutes from now, and we're going to get Luca and the band to play us out.
Definitely.
Thank you so much.
Amazing. Thank you. This one's called Lie to Me.
Don't get addicted to the show. Said it's late and I don't know where to run for the city of users. Coming from my heart, can't you see that it's coming from my heart? Lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. Lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. No, please don't leave me all alone. Said I'm sinking to my bones. I can't run from the city of users. Coming from my heart, you see that it's coming from my heart? Ooh, lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. Yeah. Lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. Hey. No, talk slow cause you're breaking up. You said don't wait but you never said you can work it out. No, talk slow cause you're breaking up. You said don't wait but you never said we can work it out. Lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. Lie to me, said lie to me when I was too blind to see. It's taking me and I can't keep questioning why you only ever care about beauty. No, talk slow cause we're breaking up. You said don't wait but you never said we can't work it out. You only ever care about beauty.
Little drama for your afternoon. Thanks so much for having us again. We're gonna end this with one more song called Time. Thank you so much for watching, everyone tuning in. And again, my name is Luca Closer. This is my lovely band. And we're very happy to be here today. Thank you so much.
There's a limit to the way you treat me. Must be dreaming. Won't deny it defeats me. Take it easy. Glad you're doing fine. While my feet can't touch the ground. I saw better days before you came my way. This doesn't get better with time. I'm standing on the ledge alone tonight. This doesn't get better with time. I thought you said we'd always be alright. Still crave that feeling. I wish you'd come around. I'm leaning forward, but you just bring me down. I'm giving you too much attention. I wish I'd make it through. Ooh, getting closer, but I can't forget you. Hey, glad you're doing fine. While my feet can touch the ground. Hey, I saw better days, oh, before you came my way. This doesn't get better with time. Get better with time. Let you alone tonight. This doesn't get better with time. I thought you said we'd always be alright. Who do you love? Who do you love? Who do you love? Who do you love? It's not me. Who do you love? Who do you love? It's not me. Who do you love? This doesn't get better with time. I'm standing on the ledge alone tonight. This doesn't get better with time. I thought you said we'd always be alright. This doesn't get better with time. Yeah, better with time. Let you alone tonight. This doesn't get better with time. I thought you said we'd always be alright. Oh, 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 who do you love? I'm standing on the ledge alone tonight. Oh, 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 I thought you said we'd always be alright. Oh, who do you love?
Thank you so much again. I hope you have a great rest of your afternoon. And thank you, Nick Harcourt and ETF, for having me in the first place.
In the world. The ETF.com Awards are about to start. I do want to very quickly say a big thank you to Luca Closer, who just performed for us. And she's got a song out right now called Lie to Me, which is fabulous. You should check it out wherever you listen to music. And while Drew gets himself situated, I'm going to move this out of the way. And the ETF.com Awards are about to begin.
Well, welcome. I'm Drew Boros, editor-in-chief of ETF.com. This is
It's on.
It's coming out.
I turned it on.
It says it's muted.
On the top, there's a mute.
Thank you.
We're live, so there's going to be technical difficulties.
That's what happens.
That's why we're here in Hollywood. Welcome to the ETF.com Awards. This is our 8th annual event. First time we've done this virtually, and we're in the heart of Hollywood, and we plan to bring you a rockin' show. Again, want to thank Luca Closer for setting the tone here. We promised a show, and I think we're going to give you one. We have some very special guests coming up, including Reggie Brown, Tyler and Cameron Winklevoss, Kathy Wood, Bruce Bond, and others. And before I kick off, I'd like to introduce Nick Harcourt. Nick is part of the scene in the LA music industry. He has a morning radio show. You might also be familiar with him from the Guitar Center series on DirecTV, over 100 episodes with all the big players in music. And for the ETF.com audience, you may remember Nick in Florida 2 years ago. He did an outstanding interview with Quincy Jones on stage. So Nick, welcome. Thanks
Thank
to
you.
see you again.
My pleasure.
We're in Hollywood. We're right between Sunset.
We
We're
are.
right between Hollywood Boulevard. There's so much music history. People think of Hollywood as cinema, but there's so much music history here. We're at the Hotel Cafe. Set the scene a little bit for us.
I was talking a little bit earlier on about how a friend of mine called me about 20 years ago and told me that this venue had just opened up in Hollywood, a pal of mine called Gary Jules. I believe he had the first night here. It was Tuesday nights. And at that time, they didn't even have a liquor license. It was just a coffee shop. And he was playing music. And I had a radio show in town, as you know, at the time at KCRW. And this place became a haven for singer-songwriters 20 years ago. And throughout that period of time has given people like Adele her first ever United States show. People like Katy Perry played here, Sarah Bareilles, Damien Rice. There is a long, long list of people who've gotten their LA start in this venue. And as you can imagine, over the last year, it's been very difficult for live venues anywhere to stay open. I'm so grateful that the Hotel Cafe has been able to keep the lights on, so to speak, by doing things like this, by renting the place out for other events. And here we are today for the ETF.com Awards.
Well, thank you. And people should also know down the street, Hollywood Strip, we have the Rainbow Lounge, Troubadour, Whiskey A Go-Go.
Sure. Everyone
from the Doors, Jane's Addiction, back to the 60s. So the history here is very rich in music. We thought that would be special to kind of have that thread throughout. So we're going to hear more music down the road, and I hope you check out Luca Closer on YouTube. She's got a beautiful voice. I think you'll enjoy it. You've heard a lot of her songs. Someone that's up and coming, and that's what Hollywood's about, right? You come here to make a start.
This is where you come to make your dreams come true, hopefully, yeah.
Well, let's kick off the show, okay? But before we get started with the awards, we kind of want to look back at 2019. Unfortunately, last year with the pandemic, we weren't able to have an event, really have a show. And while we did give out awards, we weren't able to really recognize the way we want to. And while most of these awards are for products or companies, last year's Lifetime Achievement Award winner, Reggie Brown, wasn't given the opportunity. We usually have an event, wasn't given the opportunity to address the industry. And we appreciate your attendance. And what we want to do is give Reggie that flashback look and what he might have said a year ago. And this will be our first guest today, and he's going to be interviewed by Bob Pisani at CNBC. So, Bob, kick it off to you.
Thank you, Drew and Dick. Really appreciate that. And I want to get right down to it. A man who should have been speaking last year but wasn't able to, but we're going to correct that. The Lifetime Award winner, Reggie Brown, a principal from GTS and a friend of mine for 15 or 17 years. I don't know how long it's been, but it's been a long time. We go back a ways. And Reggie, thank you for joining us for an award richly deserved. We have 10 minutes. I want you to look back a little bit. Two things. One, the birth of the ETF business, because you were there back then, and your role in helping birth that business and where it is right now. I know you started back at the Amex, as I recall, which was such an important place for the innovation of ETFs and the whole SPDRs business. Why don't you tell us a little bit about that and give us a few minutes to reminisce about your career and your place in the ETF history?
Well, first, I appreciate the opportunity, and I'm very thankful of the recognition by my peers in the industry for the award last year. It's been such a long 13 months that we've been quarantined and not participating in person. But largely, Bob, I can tell you that the start of my career was at the Philadelphia Stock Exchange in 1984. And back then, after the 87 crash, I do remember the regulators came out with a concept paper saying that if there was a release mechanism for program trading, the stock market would have crashed 22% at that time, as the Dow Jones was the indicator. The Philadelphia Stock Exchange was racing to bring out SIPs, certificate index participation receipts. That got halted, and by a lawsuit by McGraw-Hill, and in 1990 ETFs were born in Canada under the TSC 20. But the Amex in 1993 came out with an ETF, and I walked into the crowd in 1997 as one of the first market makers as the crowd was forming. And I can tell you that Amex has a lot of the pillars of the ETF industry that even remain today, got their start on the Amex. And it was just a wacky place to work, but it was an interesting place from innovation and from all the great people that are around this industry and all that they do got their start. I remember I was on the design team for the QQQ, and we were at the Amex at the time. We were lobbying to get the single letter Q, and Dick Grasso of New York, prevented that. So there's a lot of great history coming out of that place, and ETFs are born from that. So my role in the industry, whether it's helping at the time BGI in the early stages, Vanguard entering the marketplace, State Street with their SPDR in the mid cap, and then seeing Bruce Bond and PowerShares come in the marketplace. I just had the privilege, it's been an honor to be a part of that industry for such a long period of time, and to see fast forward where we are today is pretty incredible.
Yeah, it's been a great privilege for me. I've been the stocks reporter for CNBC. I started, went from real estate reporter to stocks reporter in '97 and witnessed that whole birth. I wonder if you could mention just the lucky confluence of events that people often talk about ETFs as having lower costs and more tax efficient, but they also correspond with the birth of the indexing business. And of course, Jack Bogle at Vanguard had a lot to do with that. But that was a major reason why people started to realize not just tax efficiency, but the fact and lower costs, but the fact that owning owning indexing and trying not to beat the market and not necessarily active stock picking might do well. Can you address that for a minute? And do you feel that is still happening? Essentially, we get debates all the time about active investing on CNBC. It's a mainstay of our programming, but it's certainly very obvious to me that ETFs have benefited from the move towards passive investing.
Well, that's true. I think what my fellow Pennsylvanians, the folks over at Vanguard, over in Malvern, PA, have done under the leadership of Jack Bogle, I mean, changing the mindset of investors around investing in the index, and then investing at a reasonable cost. That was their philosophy, and I think that brought more people to the marketplace. But if you look at the overall landscape and the evolution, first it was the major benchmarks that were launched in the ETF format. So it was SPDR for the SP 500, MidCap, the 400, the NASDAQ 100. Patty Dunn, under her leadership, under BGI, bringing out the World Equity Benchmark shares that are now classified as iShares with their global series of a single country ETFs. All that was developed in a relatively short period of time, and I won't forget the role of journalism has played in bringing the story around these little instruments being traded at the Amex and shining a light to consumers. And first it was the hedge funds, then it was the ETF strategists, or folks that were trying to package up tools into strategies, and that was like 2010 when all the tools became available. And so it was essentially it was hedge funds doing the arbitrage between the futures and the underlying index, doing index arb. Then it was the retail investor. No, it was the stockbrokers and representatives, the intermediaries, that were packaging up strategies that brought ETFs to Main Street. And then all of a sudden, retail players start to understand, given the proliferation of new products, and then institutions over time. So there's been a series of advancements over the time period as the tools became available. And then think about it, the first commodity ETF was the GLD. And at that time it was Bear Hunter and their work, to help bring that to the marketplace. So I think, a lot of credit is due to a lot of different pillars in the industry. The role that Gary Eisenreich played at the time Spiro Leads, with shoe leather on the ground, knocking on doors, talking about the benefits of trading SPY and not necessarily futures. No one understood 16ths and 30 seconds. I mean, all the floor brokers in the Amex was hilarious, coming up trying to trade in 16th and 30 seconds, not understanding the math conversion. Such a riot. But I think largely, if you think about just all the different evolution over the last 20 years, particularly around fixed income, now active managers, commodities, retail players can go and grab exposure in all these unique different areas just because of a single event that happened, the 1987 crash. And then from that, came innovation around not only regulation, but mindset, and then innovation.
Yeah, I think that 87 crash really still resonates in a lot of ways. I only have 2 minutes left, Reg. I wonder if you could spin this forward a little bit. I was talking today whether we were at the peak earnings in the stock market and the peak reopening. We're certainly not at peak ETFs. Can you give a little speculation of where we go from here? We're north of $5 trillion in assets under management, but it's still a small amount of the $70 trillion market cap of bonds and stocks in the United States. I see more money coming in from mutual funds attempting to convert ETFs this year. You want to give us just a quick 2 minutes on the future of ETFs?
Well, I think with the new ETF rule, you'll see additionally more players coming in, bringing innovation. I think active management will adopt ETFs holistically and convert from mutual funds into ETFs away from retirement platforms. I think that single commodity ETFs are coming, and I think that you'll see more of them, in my opinion. but largely thematic. The themes as they germinate in the marketplace will populate. The self-directed investor, if you look at the success of all these market access apps that are out there, and the young people who are coming into the marketplace, they're demanding transparency, they're demanding price competitive, and they're also demanding these tools called ETFs to grab market access, market exposure. So, in my opinion, in the next 5 to 10 years, I think you'll see not only doubling of the ETF industry, but you'll see triple the amount of ETF sponsors in the marketplace with new ideas, innovation, and cost being driven. And then we look at the market centers, I think you'll see more market centers. I mean, you're seeing tokenized fractional shares occurring, outside the United States. We're just at the tip, and we don't have crypto just yet. So there's more to do.
Yeah. Well, there's 30 seconds left here. You want to give us 30 seconds on cryptos and ETFs?
Well,
30.
I think it's time. The Canadians have launched it. I think all the regulatory structures are here. I think we'll see a crypto ETF in the United States within the next 12 months. And I hope I'm the first market maker for that. But in general, Bob, I appreciate the opportunity, and all my friends out there, and even some of my competitors who are now friends, but were competitors a couple of years ago. I really appreciate the recognition. And I hope that my time at GTS and things we're doing here will resonate with everyone in the marketplace as a renewal from our long history here in the ETF landscape.
Reggie Brown, thank you very much on behalf of ETF.com for your work, your contribution to the industry. And on a personal note, thank you for your friendship. I've called you many times and asked you about, am I getting this right? Am I understanding this story right? And you've always been very helpful. And I hope you will be in the future. I'm not going anywhere, and neither are you. So Reggie Brown, Lifetime Award winner, thank you very much for joining us. We really do appreciate it, and I'll see you soon.
Thanks, Bob. Appreciate it.
Drew and Nick, I'm going to toss it back to you two. And great music, by the way. I really enjoyed listening to it.
Thanks, Bob. And of course, thank you, Reggie. Reggie's been an unsung hero in this industry. Market making is one of those things that seems transparent, but it's not. It takes people. And Reggie has been the heart and soul of making markets for ETFs that are difficult to make. But now we're going to go forward. Nick is going to be the virtual envelope, if you will. We can't hand each other things. So we're going to kick off the awards. We're going to go through a couple awards, and then our next speaker will be our keynote, Tyler and Cameron Winklevoss, talking about disrupting Wall Street, Bitcoin. It's going to be a great talk. So we're going to kick it off with the best new ETF of the year. Nick, are you ready?
I'm ready. This is my virtual envelope here.
All right, well, I got you backed up if it goes out. So best new ETF of the year. Many of you probably know the finalists, but I'm going to go through them anyway. So here we go. The nominees are Direction Work From Home ETF, WFH ticker, Invesco NASDAQ Next Gen 100 ETF, QQJ, iShares US Small Cap Value Factor ETF, ticker SVAL, Roundhill Sports Sporting and Gaming ITF, BETZ Bets, and finally Vanguard ESG US Corporate Bond ETF, VSEP. And I'll hand Nick the envelope.
The envelope, I got the envelope here.
And the winner is?
And the winner is of the best new ETF of the year, Invesco NASDAQ Next Gen 100 ETF, and that is QQQJ. Congratulations. Fantastic.
Cue the
applause.
Okay. Congratulations. That is a great new fund. It has taken sort of the foundation of the QQs, added the Next Gen to it, and has been very popular. We've seen a lot of assets go into that fund, and obviously is resonating within the industry as well. So let's keep rolling. This is a fun one, Nick. Best new ticker. And the nominees are Roundhill Sports Betting and iGaming ETF, ticker BETZ, BETZ Bets. Direction Fallen Knives ETF, ticker KNIFE, NIFE. Defiance Next Gen SPAC Derived ETF, SPAC, SPAK. The SoFi Weekly Income ETF, TGIF. And Direction Work From Home ETF, WFH. And finally, the Vanguard ESG Corporate Bond ETF, VCEB. And the winner of the Best ticker of 2020 is
And the winner is, and we're doing this live in Hollywood, so it's TGIF, which is the SoFi Weekly Income ETF. And again, congratulations.
Let's keep rolling. We're up now at the best new U.S. equity ETF, and the nominees are Defiance Next Gen SPAC Derived ETF, ticker SPAK. Dimensional U.S. Core Equity Market ETF, ticker DFAU. Direction Work From Home ETF, WFH, ticker. Invesco Next Gen 100 ETF, QQJ. And the iShares U.S. Small Cap Value Factor ETF, SVAL. And the best new U.S. equity ETF is
And the winner is Invesco NASDAQ Next Gen 100 ETF, QQQJ. That's two wins.
2 out of 3.
Congratulations.
So we have a theme here. Obviously, this is a product that's resonating. Congratulations to Invesco and NASDAQ with that index that is obviously proving popular. All right, fourth award before we kick off to our keynotes. The best new international global equity ETF. Nominees are BNY Mellon International Equity ETF, ticker BKIE. The Dimensional International Core Equity Market ETF, DFAI. Innovator MSCI EFA Power ETF, January, UAN, ticker. The iShares ESG MSCI EM Leaders ETF, LDEM. And finally, the Crane Shares CICC China 5G and Semiconductor Index ETF, KFVG. Nick, best new international global equity ETF for 2020 goes to.
The winner is Dimensional International Core Equity Market ETF, and that is ticker DFAI. Congratulations.
Congratulations, Dimension, a new ETF issuer to the market, and obviously found a sweet spot overseas. We'll see what else is coming up for them later. With that, we're going to kick back over to our keynote today, which is the Tyler and Cameron Winklevoss. We're very excited to have them. We're very interested to hear what they have to say. Right now, there's no bigger topic in the ETF industry than when is the first U.S. Bitcoin ETF going to hit the market. We have as many as 9, you could even argue a dozen filings trying to get through the SEC. We're trying to democratize the Bitcoin world, put it into a very accessible package at a cheaper cost. And with that, I think we're all very interested in hearing from Tyler and Cameron Winklevoss, and CNBC's Seema Modi will be kicking off the interview. Seema.
Excited to moderate this discussion. My name is Seema Modi, Global Markets Reporter at CNBC. Pleased to welcome Cameron and Tyler Winklevoss of Gemini. Hi, guys.
Hey, great to see you, Seema.
Great
Thanks
to
for
see
having
you
me.
both. The crypto industry has had a long problem, high degree of interest, with a notable lack of investable instruments or tools to invest in this space, but that has quickly changed. Tyler, can you bring us up to speed as to how the crypto industry has evolved in recent months?
Yeah, so I'd say that the last year has been a big year for Bitcoin regulated fund products, especially up in Canada. We've seen the world's first Bitcoin ETFs trade, the Purpose ETF and the Evolve Bitcoin ETF. And I'm proud to say that Gemini custodies all the Bitcoin for those funds. And so a lot of action has been happening up in Canada. And with the recent confirmation of Gary Gensler as a chairperson of the SEC for the US, he's a student of crypto. He's lectured on crypto. So I think he's going to be a great friend to the industry. There's a ton of demand for and already new filings for Bitcoin ETFs in the US. I think that ultimately it's a when, not an if question for a Bitcoin ETF in the US, given all the success of products in Canada. And I think that could happen as early as this year. So lots been happening.
Let's dig into that when, Cameron, because a number of ETF investors in the audience are interested in launching their own crypto-related ETF. While Bitcoin ETFs exist, they don't directly own Bitcoin. They have portfolios of stocks that have exposure to the cryptocurrency space. So your take on how far we are from a Bitcoin ETF getting regulatory approval and what the pushback is right now?
Sure. So I think it's easy. One way to think about this is to, as Tyler mentioned, Gary Gensler was just confirmed as the next chairperson of the SEC. So I think over the coming months and into the summer, he'll be building his budget and priorities, which will then hopefully be approved by Congress. So I think that it's possible that he could bring this issue or sort of deal with this matter and take it up as soon as September, October of this year. So it is possible that we see, U.S. ETFs by the end of this year at earliest. And of course, his term will go for 4 years. We're really confident that something will happen during that time period, and it could be very soon.
Tyler, with high-profile investors, whether it's Elon Musk, Stanley Druckenmiller, putting more money into cryptocurrencies, there's also this need to develop infrastructure, clearinghouses, enabling custodians, providing banking solutions, compliance. What kind of solutions are you guys working on at Gemini, and what are some of the challenges with that?
Yeah, so we've been building Gemini now for 7 years. We're regulated as a New York trust company, and we built Gemini from day one with a security mentality first. So we've been safely custodying crypto. Now we custody over 25 billion of crypto for customers. And so we've tried to make it simple and easy and reliable and secure to engage with crypto, to buy crypto, and also hold it. So we've worked with everyone from retail customers, mom and pops, to institutions like fund issuers, Bitcoin ETFs, also companies, helping them put Bitcoin on their balance sheet. So we've been hard at work building the institutional grade infrastructure with Gemini over the last 7 years. And it's great to see this institutional interest coming over the last year because we've been ready and we've been helping them get Bitcoin on their balance sheet. More specifically, Tyler's referring to Gemini Fund Solutions, which is our full stack solution that allows sponsors and fund issuers to set up and have the infrastructure they need to custody Bitcoin for their fund at Gemini. And we also partner with them on trade execution. So we built that platform specifically for the issuers and sponsors.
Got it. And is building out these solutions, Tyler, the way you effectively compete with the likes of Coinbase, which is now a publicly traded company?
Yeah, so we first got into Bitcoin. We bought most of our early Bitcoin on Mt. Gox. So we saw firsthand how difficult and how scary that experience was. And that really informed us on building Gemini. And so, yes, it's critical that infrastructure like Gemini and also Coinbase exists, because I've said this before, that one company won't build this entire market. Like, we all have to build this together. So as much as we can think we're competing with each other, Gemini, Coinbase, and a few other companies have really helped build this market. And I don't think we would all have been able to do it just alone.
Cameron, your thoughts on Coinbase? This seems like a watershed moment for the cryptocurrency industry. Is Gemini next? And how do you ensure you can steal market share from them going forward?
So first off, I think it's a great moment for the industry, and we wish them the best in trading going forward. We continue to sort of look at the public markets and determine whether that would make sense for Gemini. So we'll keep watching that. I think also in terms of the Gemini Fund Solutions, it is one of many products that we offer. And we sort of joke that there used to be the Intel Inside marketing campaign, where Intel was sort of powering all these different computers in the market. And Gemini is inside a lot of the funds in Canada. and will be inside a lot of the US based funds. So that is very much a part of our institutional offering. Of course, we have a lot of different retail oriented and individual related products. But to Tyler's point, financial markets are generally not built by one company in particular. And we really look forward to kind of continue to build the North American market alongside Coinbase in many ways. And we think it's a great moment for this.
Yeah, and we have some really cool differentiated products. One is live called Gemini Earn, where you can lend your crypto and earn interest on your Bitcoin that is sitting in your Gemini account. We also have the Gemini credit card coming soon, where every time you swipe or use your credit card, you can earn Bitcoin back or other crypto of your choosing back in rewards. So some really cool products that differentiate us as well.
Cool. Sounds interesting. There is this excitement that we've been seeing around the cryptocurrency space here in 2021 for a number of reasons. But with that excitement is still a number of critics, powerful individuals from Secretary of Treasury Janet Yellen to Christine Lagarde of the ECB, who say that Bitcoin is being used for money laundering, terrorist financing, and other illegal activities. Your response to that?
So we remember the early days in 2012 and 2013. It was very much more, it was a Wild West, but the prevailing narrative back then was Silk Road. And when Silk Road was busted, the Bitcoin price actually went up because the proof was in the pudding, and it actually wasn't all used for illicit activity and all this nefarious stuff that was being presented as the sort of prevailing narrative at the time. And these talking points are quite frankly dated. Gemini uses blockchain forensics and tools. We can sort of trace the provenance of Bitcoin, and we have really obligations under FinCEN and the BSA, the Bank Secrecy Act, and we fulfill all of those. And I just think that narrative is actually simply not the case. And we've seen it. We see it firsthand with the tools that we have and our compliance department.
With that said, a competing exchange recently in the last 24 hours said that a huge crackdown could be coming. A lot of people have said this. Your thoughts, Tyler? Is there something like that in the cards?
That sounds like a rumor. I mean, we've been a regulated exchange from day one by the New York DFS, the largest bank and insurance regulator in the state of New York. We've taken a ask for permission, not forgiveness ethos from the beginning, so we never operated without a license. And we've had, frankly, a very collaborative and good relationship with all of our regulators. The DFS, we've helped them shape the regulations. So, I think, I'm not sure what exactly that statement refers to, but we continue to collaborate and have good relationships with regulators in the U.S., but also working with regulators internationally. So we're licensed by the FCA in the UK to offer crypto. We have a license pending or in process with the regulators in Ireland to be licensed in the EU. We also have a license in flight in Singapore with the regulators there. And all of these regulators have been thoughtful and ultimately welcoming to usher in the merit of this innovation in a thoughtful, regulated manner.
And I think the another thing to point out is the same sort of talking points around Bitcoin being used by bad actors can be said about the internet and really any modern technology. The technology is agnostic. With Bitcoin, though, we actually have a ledger and a blockchain where we can determine where the source of funds and the activity, and we can conclusively say that it's really not a big part of the network or the community. The same is true for Ethereum and other cryptos. So a lot of this always sort of boils down to education, and that's a big part of what we do, and quite frankly, why we're talking now, to try and educate people on the different pathways they can access crypto, be it in an ETF that trades on the TSX or Gemini.
So Cameron, if it's not a crackdown, then what is it that keeps you guys up at night? What is the biggest risk you see right now facing this industry that you guys are operating in?
I mean, to be frank, there may be crackdowns on people who aren't doing things the right way.
So there may be enforcement actions because the tail of enforcement is slower. But ultimately, that would be more on the companies, and I don't believe it would be directed at Bitcoin itself or Ether itself. The path is quite well understood in the U.S. To the legitimacy and the legality of Bitcoin, starting in 2015 with the coin flip enforcement action with the CFTC, which called Bitcoin a commodity like gold, which was upheld by courts. So there's a lot of well understood legal precedence in the U.S. That is totally accepting of both Bitcoin and Ether and other cryptocurrencies. So it's kind of important to divorce or separate the two between companies that may be doing the wrong thing and acting poorly versus cryptocurrencies and the networks themselves.
And since we're speaking to a number of ETF investors here, over time, Tyler and Cameron, do you see the type of crypto ETFs changing, broadening, becoming more diverse over time?
Yeah, I mean, I think there's a question around whether they're single asset ETFs or if there's an ETF that's a basket of different weighted cryptos, like Ethereum, Zcash, Filecoin, and different projects, or maybe they're just single assets, and individuals construct their portfolios accordingly based on the single asset ETFs. And I think we're going to see some innovative products, and there's all kinds of cool crypto native things like mining hash power and different KPIs and ways to gauge the success of the network and vice versa. So I think over time we're going to see a lot of innovation in this space. I think that a Bitcoin ETF is really the first step, and then building on top.
Yeah, I think as soon as a Bitcoin ETF happens, which I think it will, and it could happen as early as this year in the U.S., the next ETF is going to be an Ether ETF, and then potentially other single coin crypto ETFs. And then at some point, someone's going to want to bring an ETF that sort of indexes the crypto landscape more than just one crypto. So I think you're going to see, I think the Bitcoin ETF is the first of many, but you're going to see this evolution or progression of many products down the road.
All right, Tyler and Cameron Winklevoss, thank you for joining me today. Appreciate your time.
Thanks so much, Nina.
Thank you, guys.
Welcome back to the ETF.com Awards. We're live here in Hollywood. I want to thank Tyler and Cameron Winklevoss and Simi Modi. Told you we're going to have an action-packed show here. We've had music, we've had Reggie Brown, we've had Tyler, Cameron Winklevoss. Coming up, we still have Kathy Wood and Bruce Bond, plus some breakout sessions afterwards and networking rooms. So stick around. The show's just not awards. We have more than that. And let's go back to awards. So with that, let's go into our fifth award of the evening, the Best New International Global Fixed Income ETF. And the nominees are Avantis Core Fixed Income ETF, ticker AVIG, Franklin Liberty Ultra Short Bond ETF, FLUD, the Global X Emerging Markets Bond ETF, EMBD, and finally the Hartford Core Bond ETF, ticker HCRB. And the winner is...
The winner of the Best New International Global Fixed Income ETF is Global X Emerging Markets Bond ETF, and that is EMBD ticker. Congratulations.
Woohoo!
Yeah.
Woohoo! Let's keep rolling. Our next award, Best New U.S. Fixed Income ETF. Nominees are Goldman Sachs Access U.S. Aggregate Bond ETF, ticker GCOR, GCOR. The Innovator 20-plus year Treasury Bond 5-floor ETF, July, ticker TFJL. The Janus Henderson AAA CLO ETF, JAA. Sophie Weekly Income ETF, ticker TGIF, you've heard that. And finally, the Vanguard ESG US Corporate Bond ETF, ticker VCEB. And Nick, the winner is...
And the winner of the Best New U.S. Fixed Income ETF is Vanguard ESG U.S. corporate bond ETF, and that is a ticker of VCEB. Congratulations.
Congratulations, Vanguard. Two more awards before we kick over some more content sessions. The best new ESG ETF. The nominees are iShares ESG MSCI EM Leaders ETF, ticker LDEM. JP Morgan Carbon Transition US ETF, Equity ETF, I apologize, ticker JCTR. The TruShares ESG Active Opportunities ETF, ticker ECOZ, ECOZ. Again, the Vanguard ESG US Corporate Bond ETF, ticker VCEB. And finally, Victory Shares Top Veteran Employers ETF, ticker VTRN, Veteran. And the winner of the best new ESG ETF is, Nick.
TruShares ESG Active Opportunities ETF, and that is ECOZ. Congratulations.
Another new issuer making its mark in the industry, and of course we always love to see the new players come on to the scene. So we have one more before we'll kick off to our next piece of content. The best new smart beta the best new smart beta or factor ETF. And the nominees are Direction Fallen Knives ETF, ticker NIFE, knife. iShares US Small Capital Value Factor ETF, ticker SVAL. The Pacer Lunt Large Cap Multi-Factor Alternator ETF, ticker PALC. Syntax Stratified Small Cap ETF, ticker SSLY. Finally, the VanEck Vectors Moody Analytics IG Corporate Bond ETF, ticker MIG. And the winner of the best new smart beta or factor ETF is
iShares US Small Cap Value Factor ETF, and the ticker is SVAL. Congratulations.
Congratulations, iShares. That's a product that came onto the market late last year when small cap and value were sort of beaten down. They came back. Obviously, we've seen what the market's been done. Timing is everything sometimes in this business. And obviously, the right product at the right time is a recipe for success. So what we're going to do right now is we're going to give you a preview of one of the breakout sessions we have coming up. Excuse me. I want to kick it off with Dan Lefkowitz, as he's going to talk about the ESG solutions session. And we'll come back, a couple more awards, and then we're going to hear from Kathy Wood.
Thanks so much. Appreciate it. Welcome to a preview of our ESG solutions panel. I wore my green shirt for the occasion. ESG is not a new topic to investment conferences. We've been talking about it for years, but what's changed recently is that real assets are now flowing into the space, not just at the institutional level, but ETFs, retail mutual funds. According to Morningstar's data, in 2020, 51 billion in inflows into U.S. ESG ETFs and mutual funds. That's 30% growth. And on a worldwide basis, there are more than $1.5 trillion in ESG funds and ETFs. So it feels like we've really reached a tipping point when it comes to ESG. And I want to ask one of my panelists, Sylvia Jablonski from Defiance ETFs, for some perspective. Why was 2020 such a breakout year for ESG?
Hi, Dan. Great to see you. So I think that, as you said, ESG has been around for a while, but really picked up last year. So if we just look at the year-over-year flows, I think Bank of America put something out that they saw 135% increase in trading flow. And a lot of the surveys out there are saying that ESG investments could potentially double in the next year. And I think that a lot of that has to do with just this continued societal need to see companies transform, a worry about climate change, really. And I think part of that came with the pandemic. I sort of have this bizarre theory that if we think about the things that could end the world, it's an asteroid hitting the Earth, it's a global pandemic, it's a nuclear bomb or something like that. And all of a sudden, we experienced one of those with the pandemic. So I do think that a lot of these topics came to the forefront, and we started thinking again about climate change, and particularly with the new election, new president coming in, focusing so much of his spending and agenda on that. It really came to the forefront again. So I think investors in general want to align their portfolio decisions with their beliefs, and now it's becoming a little bit more practical to do so.
Okay, that's great. I'd like to turn to Bill Herman from Wilshire Phoenix. Bill, lots of growth in this space, but also lots of challenges. It's still nascent. There's terminology that's really confusing. Data, reporting related issues are rife. What do you see as some of the key challenges related to ESG?
Yeah, it's good to see you, Dan. Thanks for having me. Yeah, I think just the term ESG. I think there's people even have different names for the what the acronym even means. I think the common is environmental social governance, but maybe the SEC has a different name, and maybe people in that's not a problem. But I think as the space gets bigger and bigger, and now it's become significant size, especially in the U.S., but especially in over in Europe. I've read Ernst & Young, I think, in partnership with ETF Steam. I think it was growing at a SAGR of something like 18% and representing 50% of all assets in Europe in ESG funds. I mean, that's pretty substantial. And it, like any investment strategy, I mean, I'm sort of agnostic on the on ESG in general. I think there's different types of ways that people can contribute to either the E, the S, or the G. But it is a great way for people to access that certain strategy. But again, not without the risk, I think, and it's inherent with the SEC coming out with a investor warning. I think it was last week or the week before. So there's some problems in the space that need to be addressed, and maybe not so many problems, but things that need to be clarified. Index methodologies maybe not clear enough, or maybe some that overlap. But there's some problems in the space that need to be addressed, and I think that we all do this, as ETF sponsors or what have you, or in the space for the sake of investors and protecting investors, and disclosure needs to be appropriate, and people need to know what they're buying. But overall, I think it's a great concept. I just think it, like like you said, anything nascent, new, innovative, it just needs to be just a fine tuned just a little bit.
Well, thanks so much, Bill. We look forward to continuing the conversation. Up next is a Spark musical interlude of about 4 minutes, followed by a few words from Bruce Bond, founder and CEO of Innovation ETFs.
This here's a little tune we like to call Sweet and Sunshine Wine. 1, 2, 3, 4. I was thinking about you all night. You've been taking up all of my days. Something about the way you move can't keep me away. You were working on a weekday. You were dreaming all your life away. I'll meet you after midnight. No, I can't wait. sunshine walk. There's something about a new love in the summertime. Sweet sunshine walk by the shadows of the daylight. I made you mine. Sweet sunshine walk. You're breathing in me new life, and it's about time.
Hi, everyone. It's Jim White, founder of Spark Network and ETF.com. And I'm here with ETF industry legend, Bruce Bond, founder of PowerShares, and now the founder and CEO of Innovator ETFs. So Bruce, I'll turn it over to you.
Yeah, I wanted to talk to you a little bit about defined outcome ETFs. Defined outcome ETFs, as you know, if you've heard any of our webinars or presentations in the past, give you the ability to know before you invest what your potential outcome will be. Then we started with what we called the buffer ETFs, and the buffer ETFs give you a certain amount of buffer on the downside against losses in the marketplace. And we did that, with the SPY as well as MSCI, EAFE, Emerging Markets, the Russell, the QQQ, so that you're able to just very easily participate in the market in a benchmark that you're interested in, but have a built-in buffer against losses. Most people that are investing in the market today that have real money, that are retiring soon, they don't want to take the risk of the market. A lot of times I talk about this, about going naked into the market. That's what all of us do today. We just buy the equities and hope they go up. You really don't have to do that anymore. If you use a buffer ETF, you can go in, you get performance on the upside to a cap, which we tell you up front what that will be, and then you have a buffer against losses. And so you're able to make a determination of, hey, is that enough cap for me to get next year versus the buffer of losses? And we found that a lot of people are very, very interested in that. And then on the second side of that, we just introduced on April 1st what we call the accelerated ETFs. And what the accelerated ETFs do is they give you a multiple of the upside to a cap, and you get 1-to-1 on the downside. We also have one with a buffer, but just to keep it simple here, the way to think about it is you can buy SPY and you get double the upside of SPY to the current cap is like 17.16%. You get double the upside to that with 1-to-1 on the downside. So if you currently have exposure to the SPDR, but you think next year, is going to be an average. The average return on SPY since it came out has been about 10% with the dividend. So if you had that next year, 10% with the dividend, you actually are going to get 17%. You would probably get capped out. And therefore, you have the ability to accelerate your returns in that space between 1% return and 17% to outperform the market over that period. Whereas, if you weren't able to do that, you wouldn't be able to get those returns. We also have triple on the SPY. They give you triple the upside to a cap. And we also have those available on a quarterly basis. So, I like to ask people, if I told you that next year the market's going to be up about 10% and you have the potential to double your upside to either 17% or 15%, would you have interest in that? And most people, of course, would say, yeah, as long as I don't have to increase my risk. That's the great thing about these new products that we're introducing. You still have your same exposure to SPY or to the QQQ, but you get this acceleration on the upside. And we do this over a year or also over a quarter. And so for those of you that look out a year and you want that return to the cap, you can get that. Or over a quarter, you want to double to the cap, you can get that. And these are suitable for long-term buy and hold investors. And that's what we think is very exciting. You really haven't had something like this available, suitable for long-term buy and hold, without also not taking additional risk for yourself. You're just, taking your SPY from here to this. You still have the same downside, but you get this accelerated upside. We think in the future, a lot of people are going to invest this way. It helps investors assure that their portfolio is going to hit the return goals that they need in that middle area up to those, high teens to 20% area, and make sure you hit those numbers so your portfolio grows as fast as you need it to into the future and take a little bit of the guesswork out. That's what we're really excited about today. We'd love for you to, come to our website, innovatoretfs.com, read a little bit about them, and join us in this, what we call the defined outcome ETF revolution.
Thanks so much, Bruce. We're going to have a few more awards coming up now with Drew. And John Southard, co-founder of Innovator ETFs, is going to be on with me later in a breakout session, kind of talking about the past at PowerShares and reminiscing a bit and talking about where Innovator ETFs is going as well. So come and join us there at 6:30, and you can meet John Southard as well. Thanks, everyone.
Well, welcome back to the Hotel Cafe here in Los Angeles. I'm Nick Harcourt, and I'm here with Drew from the ETF.com Awards. Before we give any more awards, we did just want to let you know that this venue that we're at in Los Angeles, the Hotel Cafe, has become such an iconic music venue in the last 20 years. And in fact, I was just telling Drew that just a month or so ago, during the recent Grammy Awards, the album of the year was actually presented by a member of the Hotel Cafe staff, Candace, I think, right? Who's one of the bar people here. Got to present Taylor Swift with the album of the year. That's just how iconic and important this venue has become in the last 20 years. We played you some music in between sets as well from Pearl Charles that was recorded right here for another Spark event we did recently. Fantastic place for live music, and a great place to host the ETF.com Awards this year.
Absolutely, Nick, and thank you again for coming. Nick is associated with these bands he manages. He's got his fingers all over the music industry still, and some up-and-comers certainly here.
Yes.
If you were here live for Luca Closer, her voice is amazing, and again, thank you for bringing
my pleasure
the musical taste to a stuffy financial crowd.
Thank you for bringing that jacket to a stuffy financial crowd.
Is it hurting your eyes?
Yeah.
Okay. I got it off the drapes at home. Okay, let's kick off some more awards. So, next award up, Index of the Year. And the nominees are Index SPAC and Next Gen IPO Index, the NASDAQ Next Generation 100 Index, the Sector Surfer Momentum Index, the Selective Remote Work Index, Selective Remote Work Index, and finally the Wilshire Gold Index. And the winner of the Index of the Year is...
It's NASDAQ Next Generation 100 Index. And I think that's
a
another
hat
one.
trick.
Yeah, congratulations.
That's the index of the fund that runs QQJ. But again, we can obviously see the traction of this next gen, and that's what a lot of the ETF business is going toward now. And I want to again thank Bruce Bond and Innovator. They're one of the sponsors today. And what Bruce and Innovator have introduced is, again, a whole new next gen of ETFs, built-in risk models that can help investors. And again, more and more products. We've heard about Bitcoin ETF coming. There's more and more products beyond it, Bitcoin ETF, that are just helping investors every day. So let's keep rolling. Index Provider of the Year. And the nominees are BlackRock, MSCI, NASDAQ, S&P Dow Jones, and Selective. Nick, Index Provider of the Year, the winner is?
The Index Provider of the Year, the winner is MSCI.
Congratulations, MSCI. A stalwart in the industry, and again, one of the leaders in a lot of areas like ESG, their indexes, the ratings that are on ETF.com. Again, providing information for investors, easy, transparent indexes. Congratulations to MSCI, continually putting out great products. So let's go to another award. We got two more here, and then we're going to go to Kathy Wood in an interview with Cynthia Murphy at ETF.com. Best New Active ETF. The nominees are American Century Focused Dynamic Growth ETF, ticker FDG. Dimensional U.S. Core Equity ETF, ticker DFAU. The Fidelity Blue Chip Growth ETF, ticker FBCG. The Innovator Double Stacker 9 Buffer ETF October, ticker there is DBOC. And finally, the Janus Henderson AAA CLO ETF, ticker JAA. New category with lots of new players coming on to the scene here. Nick, who is the winner of the Best New Active ETF of 2020?
And the winner is American Century Focused Dynamic Growth ETF, and that is ticker FDG.
Congratulations, American Century. Again, fairly new to the industry, coming from their specialty, transferring it into ETFs as an active manager. Again, another democratization of ETFs, giving these tools that weren't accessible to investors in a cheap and accessible, tax-efficient way. So let's keep rolling. One more award. We're going to go to Kathy Wood and Cynthia Murphy for a fireside chat. The Best Thematic ETF of the Year. The nominees are Amplify Online ETF, ticker iBuy. ARK Genomic Revolution ETF, ticker RKG. Another ARK fund, ARK Innovation ETF, RKK. The Global X Telemedicine and Digital Health ETF, EDOC, ticker. And finally, Round Hill Sports Betting and iGaming ETF, ticker BETZ, BETZ. And the winner of the Best Thematic ETF of the Year is Nick.
You know, I really do wish I had some envelopes I could be opening.
I know.
Next time, right?
Next time.
The winner of the Best Thematic ETF of the Year is the Global X Telemedicine and Digital Health ETF, and that is ticker EDOC. Congratulations.
Congratulations. And obviously, this is a fund that came onto the scene last year and is obviously a reaction to the pandemic. And again, we're seeing how ETFs just continue to evolve and provide access to areas that are moving in this part of the market. Telemedicine, teleworking, obviously Zoom has gone out of sight. So all these funds are accessible in an ETF now. And again, can't thank our industry enough for continuing to come up with innovation and products to continue to help investors. So with that, we're going to kick off to our next and last interview of the evening, and this is going to be with Kathy Wood of ARK and with Cynthia Murphy of ETF.com. We're going to talk a little bit about this whole next-gen ETF and world of investing. Cynthia, take it away.
Kathy, thank you so much for sharing in this exciting awards evening with us today. It's so always great to get to sit down and chit-chat with you.
Well, I'm delighted to be with you. I always love chit-chatting with you, so let's do it.
Let's do it. I am excited to talk about active management and just where we sit in the ETF industry today with you, because you sit in this, really cool but unique space in the ETF business, which is an active manager everyone knows by name. It's been nothing short of amazing to watch your ability to convert active naysayers into believers with your success and with your way of approaching active management. So I'd love to start just with, kind of a big picture in your experience in the last 5-6 years of working in the ETF industry. How has the ETF business, the ETF product, and just the industry in general evolved, especially as it pertains to its relationship with active management, which has been somewhat troubled, over time?
Yes, I have been watching active, of course, all my life, and when we had such a good experience with active equity ETFs, fully transparent, I thought many would follow us. And they have not. There are a few, but what has surprised me even more is that those who have haven't gotten that much traction. Now, I'm not quite sure if Fidelity's Magellan is fully transparent. It probably isn't. But I was surprised. It launched in, I think, February, and only has $29 million, whereas the mutual fund itself, Magellan, has 23 billion. So I thought, I know Fidelity is very forward thinking, and thought that, okay, maybe this is going to start that chapter, but it hasn't. Non-transparent active doesn't seem to be taking off. And I think the reason is transparency. The investors in ETFs love their transparency. They love the fact that we disclose our holdings at the end of every day, and we are radically transparent. We disclose our trades at the end of every day, which have become a subject of discussion. And so there's a little bit of a viral networking effect associated with this transparency that I think could help a lot of other managers if they were to try it.
Well, but what's interesting about transparency as a key to success here is that usually, success in active management has always been portrayed as it's all in the secret sauce, right? So I actually have read recent research from Spiva, surprisingly, and it's always a very negative, account of active managers' performance over time. But in this one specific report, what was interesting is it argued about conviction. So it said that in the bull market we've lived in, conviction has made a difference between successful active management and just ordinary, average, disappointing active management. At the same time, it comes to mind, John Bogle used to say, never confuse genius with luck in a bull market. So I'm just curious, it's been a grind to get to where you are today, which is an incredible place. But what about the market today, or the environment today is making possible for active management to finally find a groove in the ETF space?
Well, I think disruptive innovation is a big reason. The traditional benchmarks have a dearth of what we would call truly transformative, disruptive innovation. Now, many have the FANGs, but I'm talking about the next FANGs. The FANGs have already transformed the world in many ways. And so those are not in traditional benchmarks. Many active managers have been very benchmark sensitive. So they too have missed a lot of innovation, and it's becoming obvious. And I think the other side of this is creative destruction. If we're right on innovation and we run highly active, 98% active share in our portfolios, highly concentrated, anywhere from 30 to 50 names, which speaks to your the topic of conviction. But we also have a very disciplined process that we stick to no matter what the markets are going through. So we started our funds in October of 14. I cannot tell you how many risk-off periods we have had since October of 14, more than my entire 44-year career prior to that. And our strategy during volatile times, especially the beginning of a downturn in a risk-off period, they do not do well, but they usually turn up before a bear market ends. And the reason is we are focused on the new leadership. These are the stocks that are going to take the markets forward and will become the big benchmark stocks at some point. So I think the reason active for some and is taking off again is because there is so much innovation, and they are moving away from benchmark sensitivity and really stepping out into it because the opportunities are enormous.
Let's talk about disruption then. Let's use your keen eye for what we should be paying attention to and talk about Bitcoin and crypto and all this good stuff. As you watched, Coinbase had their IPO this past week. It's been a massive event. You were actually one of the first ETF managers to jump into that stock and add to several of your ETFs. So talk to me where you sit on what all of this, sometimes insane looking crypto revolution and the massive investor appetite for access to everything related to crypto, whether it's Bitcoin, blockchain. What does this all lead to? Is all this the first steps of the next big disruption in investor vehicles, outcomes, experience in the market? What's the big picture here?
Well, we have a new asset class, the first time since the 1600s, that was equities, a new asset class called crypto assets. We believe Bitcoin is the reserve currency of the crypto asset ecosystem. And we believe that institutions now, for that reason, are moving into it. When you have a company, a consultant like Cambridge Associates say to the world, hey, this is acting like a new asset class, low correlation of returns, low to no correlation of returns with other asset classes. This is what big institutions seek, more diversification, increasing returns, and lowering risk at the same time. So Cambridge Associates about 2 years ago basically said to institutions, hey, you may not agree with it, you just have to have a point of view. Agree or disagree, is this a new asset class? Agree or disagree, is this the way you want to play this new asset class? But you better have a point of view on it. You can be negative, don't invest in it, but take a point of view. We see, when I saw Mass Mutual put $100 million into Bitcoin in its general account, I said, oh my gosh, that is the shot I heard around the world, to use an expression. I said, okay, institutions are going to have to move here. And they are. What we didn't expect was that companies like Square, MicroStrategy, Tesla would start to diversify part of their cash into Bitcoin. Both of those opportunities could add, these are crazy numbers, each could add $300,000 to $500,000 to the Bitcoin price, which today is at roughly 60,000. Think about that. Each of those 300 to 500,000. We've got white papers on this topic on our site if anybody would like to learn more about it. So you can't ignore it. Bitcoin is a currency. Ether, we believe, is a currency, but Ether is the platform upon which DeFi is taking place, decentralized finance. It's going to revolutionize the financial services industry. And I really believe we all have to do a lot more homework. Is it a stable ecosystem yet? No, earliest days. This is gold rush territory, very, very early days. And so now we have what the internet has been missing all the time. This is an open source ecosystem that is going to drive incredible innovation. And I think what I feel like the Coinbase debut is a little bit like the debut of Netscape, right? Microsoft heard that shot around the world, and it invested billions of dollars. Internet Explorer, the rest is history. Netscape lost out, and Microsoft moved quickly. I do not see financial institutions around the world moving quickly to address this competition. And so there's going to be a lot of creative destruction as this disruptive innovation continues to evolve.
Kathy, thank you so much for this. I wanted to be the first to toast your success. Congrats on an incredible journey up to here. Congrats on an incredible 2020. It's been impressive and it's been inspiring to what you can do in this space. So can't wait to see what comes next.
Thank you, Cynthia, so much. Thank you very much.
Thank you, Kathy and Cynthia. We now are in the stretch run of our awards show. I also want to remind people after the awards, we have 3 breakouts. If you want to go to the Crypto Think Tank session, you just stay on the main stage here. If you'd like to go to the ESG or the Innovator breakout session, you can see on Spark where to attend that. So we're in the home stretch here. Let's kick off, Nick. We're going to got 4 more to go, and then we have the Lifetime Achievement at the end. So let's roll. ETF Issuer of the Year. The nominees are ARK, Direction, Global X, Innovator ETFs, and the Vanguard Group. Nick, the winner of the ETF Issuer of the Year for 2020 is
ARK.
Congratulations, Kathy Wood. Really bringing disruption, literally, into the ETF industry. $4 or $5 billion company in terms of assets a year ago, over 40, 50 billion now. Just an incredible story. And I always talk about ETFs in sort of the film world, where I see Kathy as sort of the independent filmmaker going up against the big studios. And once in a while you have a hit, and now
Yeah.
she's a mainstay, and like Quentin Tarantino, perhaps.
Yeah, yeah.
So anyway, we do have that independent streak alive and well in the ETF industry. So let's keep rolling here. The best new ETF issuer of the year for 2020. The nominees are Six Meridian, Bank of New York Mellon, Dimensional Funds, and True Shares. Nick, best new ETF issuer of 2020 is
Dimensional Fund Advisors.
Congratulations.
Congratulations.
Again, new ETF issuer. I think that's their second award. Congratulations, Dimensional. Keep rolling here. Now we're getting to the big ones. ETF of the year for 2020, the nominees are Amplify Online Retail ETF iBuy, ticker. ARK Innovation ETF, ticker RKK. Direction Work From Home ETF, ticker WFH. The Invesco QQ Trust, QQQ. And finally, the Invesco Solar ETF, ticker TAN. And the winner of the ETF of the year for 2020 is Nick.
The winner is the ARK Innovation ETF, and that is ARKK. Congratulations.
Double winner. Congratulations, ARK. We have one award left. Before I get there, I just want to explain a little bit about how we come to selecting these winners.
I should also let you know we're running over a little late. We've got 5 minutes.
Okay, we're going to roll quick. We also have a special guest coming up. So I want to thank our voting committee who actually picked the finalists. Coming into that, we have a nomination process. It's open to the public. We take the nominees. We come up with a finalist list based on votes and making sure categories are correct that people are nominating. And the finalists go to their voting committee that is made up. It's a new committee this year of a lot of new members. I'm really happy to introduce them. Our voting committee is Eric Balkunas at Bloomberg, John Davey at Astoria Advisors, Jillian Del Signori at Lakefront Advisory, Blair Duquesne at Ritholtz Wealth Management, Deborah Fuhr at ETFGI, Nate Geraci at ETF Prime Podcast and ETF Store, Lois Grigson at FactSet, Elizabeth Kashner at FactSet, Ben Johnson, Morningstar, Ben Levine, 3DL Capital Management, Todd Rosenbluth, CFRA, and Shanna Sissel at Spotlight Asset Group. I want to thank them very much for their efforts here. So without further ado, we're going to give our last award here, the Lifetime Achievement Award winner for 2020. The nominees are Eric Balkunas, Bloomberg, who, by the way, was not allowed to vote in this category, Bruce Bond, Innovator ETFs, Matt Hogan, Bitwise, Bert Malkiel, Wealthfront, and finally Jan Vanek. Nick, who's the winner of the Lifetime Achievement Award for 2020?
Well, I'm happy to say that the winner of the Lifetime Achievement Award for 2020 is actually here as well. So a big congratulations. He's going to come up right behind you, I think. Matt Hogan, congratulations.
All right, Matt Hogan. Congrats.
Thanks, buddy. Thank you so much.
There you go, Matt. Showed up to the audience for everyone. You can cry. You
What
can
an
thank
honor.
people.
What an honor. It's amazing to be here, Drew.
Matt, so let's talk a little bit about this path here. You started some 15 years ago. You're at the beginning of the ETF industry. You've seen the middle. You're here. One thing Reggie Brown was talking about was how journalism applied to this industry, and you were at the forefront of that with Jim Wyatt and Dave Noddig, and really bringing a legitimate journalistic view and rating and being a separate entity altogether. Where did you guys come up with that vision? And tell me what this award means in terms of that vision back in the day and where you're at today.
Sure. I mean, the award means a lot. We designed this award to honor people who had made major contributions to the ETF industry, and it's really humbling, Drew, to hear that list of people voted me to achieve the award. I don't think it's just me. I think it reflects everything we did at ETF.com. I think it reflects the work that you did, the work that Dave Nottig did, the work that Jim Wyant did, that Cynthia Murphy did. And when you think about what it is that we did, what we did was help educate people about what ETFs are and what they can do in portfolios from an independent and balanced perspective. You know, what Reggie said really resonated with me. At the beginning of ETFs, they were this new, novel, fragile idea. And it was really a bunch of individual people who sort of lifted them up and let the world understand what they were. And our role was to help people understand what ETFs are at their core, why they are cheaper, why they're more tax efficient, why you can build better portfolios with them. And I think we helped, did our part to help grow the industry into the $7 trillion and growing giant it is today.
The one thing you're known for, along with Dave Nottig, was your annual State of the Union of ETFs in Florida, which unfortunately we didn't have this year. One of those things always reminded me of what's happening today is you were really like a preacher, a prophet. You and Dave trying to spread the word independently. How important was that on top of the journalism and the website to the ETF industry?
Yeah, I think you have to get people excited. We were there preaching, if you want to use that word, to the advisors in the audience. We were trying to help them see how powerful ETFs could be in client portfolios and also give them the language and tools and examples and data that they could take to their clients and explain to them why they should transition from mutual funds to ETFs. And so I think that did play a role in getting people excited. I think it also opened up a space for ETF entrepreneurs. Dave and I and the rest of the ETF.com team, we love ETFs. That's why we did these awards. We were always interested in what was new. We were willing to give it a fair shake, say if it's good, say if it's bad. And so I think we helped open up that design space for innovators as well.
So real quickly, we've heard about Bitcoin ETF all day today. You're with Bitwise that is trying to come up with one of the first Bitcoin ETFs in the US. You already have a crypto fund that's traded off exchange. Is that only the leg of growth we have next? Everyone's looking at Bitcoin. What else is out there that's going to perpetuate this business into a $12 trillion industry?
Yeah, look, Bitcoin's very exciting. I was working on the ETF this morning before the show. We're doing real work there. But I think people undersell where we are in the ETF evolution. It's still relatively early. This industry is going to double, and it's going to double again. The fastest growth is ahead of it, not behind it. This could be the first year we get $1 trillion of inflows in the U.S. And I think there are huge areas that need more ETFs, more innovation, and more understanding. Fixed income ETFs in general, I think, is massively underpenetrated in the market, has huge potential to grow. Thematic ETFs, massively underdeveloped. ESG ETFs, again, I think we're still early. We will eclipse mutual funds for assets. That's going to happen, 26, 27. It's coming down the pike, but I think our fastest growth is ahead of us.
Well, thanks, Matt. And you being the youngest one on the stage here, you only get to win it once. So with that, thank you, congratulations. Obviously, I think it's important, biased here, that the work we've done at ETF.com has made and legitimized the ETF industry and covered it in the way that I think there was a void. So I appreciate your efforts in that.
Thank you, Drew.
So we're wrapping up, but the show's not over. We're going into our breakout sessions right now. Again, as I said, the crypto think tank, is going to be on the main stage. ESG breakout session and the innovator talk with Bruce Bond will be on the breakout sessions. And please stick around for the networking rooms. And thank you for your attendance. It's a special time for us to be able to honor the best of the best in the industry because we're believers in it. We're thinking it's doing real good for investors. And it's all because of the industry and the people that are here. So thank you, Matt. And of course, thank you, Nick Harcourt.
My pleasure. Congratulations.
Luke Closer,
thank you, sir.
and our guests.
I think we just heard his ride going past a minute ago, right?
Well, if we didn't have a siren, it wouldn't be live, right?
That's right.
So, Mike didn't work at the beginning. I had my camera messed up.
Everything else was fabulous.
And now we have the siren. So
did
live
great.
TV has to be a little bit anxious, right?
Absolutely.
So, TV, virtual event, whatever. So with that, I want to thank you all. We hope to see you next year at the 9th annual ETF.com Awards. We're not sure if it's going to be physical, virtual, or both, but we're certainly going to have another one next year. Thank you and enjoy the breakout sessions.
Okay, that was excellent. We're now moving into the crypto think tank. I'm Mike Venuto. I'm the co-founder of Taroso Investments. We're the folks behind the ETF think tank. We're excited to partner with Spark Network and support the ETF.com awards. We've got a great panel to discuss the fact that so many amazing people in the ETF world are now moving over to, as Jim White wanted to put it, the dark side. What he really means is embracing cryptocurrencies and Bitcoin and all the network of the blockchain, something that's very important to my firm. So we're going to get started here with our panelists. Now, one of them just won the Lifetime Achievement Award, so we're going to give him a few minutes to join. That's Matt Hogan. Let's give him a huge congratulations while we wait for him to join us. But let's jump over and start with Greg King, CEO of Osprey, and a number of other things. And let's just hear a little bit about your background in ETFs and now your background in crypto. Greg, my friend, tell us.
Hey, Mike, it's great to be here. I miss getting together at Chelsea Piers, though, for this event. But this will have to do. So, yeah, I'm Greg King. I'm the founder of Osprey Funds. Osprey is a investment firm that specializes in digital asset investments only. We launched our first fund, a Bitcoin fund, under the ticker OBTC just this year, although it's a 2-year-old fund. And we're excited about the space. I don't want to jump the gun, Mike, in terms of any questions you might have going forward. But for me, it's been an awesome journey, and it's just really getting started learning about cryptocurrency. I started investing in Bitcoin in 2013, so I guess I'm almost 8 years into it, and I still feel like there's just so much to learn, and that's part of what makes it exciting.
Awesome.
Wise, some of you may know me from previous roles at Barclays, where I created the iPath platform, and then Velocity Shares, where we did a lot of interesting stuff with VIX and commodity products.
Yeah, Greg's been an innovator in structuring forever, and crypto needs structure. So, Abner, in order to have structure, you got to have infrastructure. We heard from the Winklevi earlier. Tell us about, your start in ETFs and how you've converted to the world of crypto.
David Abner, global head of business development from Gemini. It's great to be here tonight. I actually started in ETFs very close to when Reggie started in ETFs, who we heard from earlier in the evening. So it was nice to hear him talk about the days, his days on the Amex, and I was on a desk at that time trading with him and facilitating flow and doing a lot of things. About 10 years ago, I moved over to the asset management side and started helping to issue ETFs and really to educate institutional investors on the growth of the product. And I think I agree with, I'm so happy for Matt and the education that was needed over the last 15 years in the industry to help people understand how to bring ETFs into their portfolios was critical in bringing a better ETF experience, a better investing experience to them. Now today, fast forward, at Gemini, we are the leading service provider for crypto ETFs around the world. We are also a crypto exchange, a leading crypto exchange and custodian, probably the most regulated firm in the cryptocurrency industry. And so we service the industry from both ways. We can handle individual investors, and we can also help funds get built and bring those products to market when investors prefer a wrapper to access cryptocurrencies.
Okay. So I was hoping Matt would get here for his intro, but I guess we're going to get right into it. When he told me he was going to be late, I had no idea he was winning a Lifetime Achievement Award. I was going to say he was busy selling out of his Dogecoin, but it is what it is. That's very much a joke. He doesn't own any Dogecoin, and neither do I anymore. So let's get right into it. When Reggie gave his speech on the Lifetime Achievement Award earlier, he talked about the 1987 crash and how that really is a big nexus for the markets embracing a different structure like ETFs, or leading to the birth of ETFs. I wonder if the same could be said for the 2008 crash. Is that the commonality, that market dislocations have changed and created a reason for innovation? So, Abner, we'll start with you. My real question is, what are the common issues that crypto looks to solve or make better that ETFs first tried to solve?
It's a great question, Mike. I think the crypto space is the next evolution of financial products. Okay, people think it's something completely different, and everybody tosses around the words new and innovative, and they were saying the same things about ETFs, 20 years ago as well. What we are on a never-ending path for lower fees, more transparency, and better investing experiences for investors. So if you forget about the price of Bitcoin and Ethereum for a minute, and you just think about blockchain innovation, what is going to happen is, faster settlement times, lower fees for investors, a wider array of investment products are all going to be facilitated by this sort of advances that come to the financial markets from the the cryptocurrency space. I look at places like I look at sectors like the bond market, and I say huge market, ripe for advances of technology. If you think about how bonds trade, it's archaic. Yes, there's $1 trillion in bond ETFs today, but I think we're looking at a world where you're seeing, $20 trillion of tokenized bonds in 10 years from now. Like it's a perfect place for tokenization to take hold and really grow advances for investors.
Before we go to Greg, do you think that tokenization will actually be primarily asset-backed? I think that is one of the things that made a lot of people fear ETFs early on was the confusion.
I think it's not going to be just asset-backed. I think it's going to be, it depends on the asset is what I think you mean. Tokenization is going to be more than just securities backed, right? So the deed to my house that's sitting in my safe in my house, don't come to my house, it will be tokenized, right? Because that will just make things flow in a more seamless manner, right? Again, more efficient, lower fees. We're seeing an explosion in NFTs right now. Those are tokens basically in the art world. Absolute explosion. It makes perfect sense. If I could tell a really quick story, I went to SAC Capital about 10 years ago. I went to the offices, and Steve, on the wall there was a video montage of sorts. And it wasn't an NFT, but I looked at it and I was like, wow, video art. I hadn't really considered that before. That's new and unique. And I really didn't think about it again. And I look back on it now at the explosion of NFTs and people buying screens to display their art. And I'm like, wow, that was really ahead of the curve. Obviously, the tokenization aspect enables somebody to say this is a one of a kind, and that validates that. So it's authentic in a certain way. But that's going to be huge with what we do to the art world. So there's lots of different things we haven't even considered yet in what's coming via tokenization.
I love it. One of my favorite quotes is from the Google CEO that blockchain is essentially the ability to make something unique in a digital world. And once you understand that, like the amount of opportunities are limitless. Speaking of unique, we're going to bring up Matt Hogan, who just won the Lifetime Achievement Award and was a little late because of that, but I think that's a good excuse. Matt, I was going to play a joke saying that you were selling your Dogecoin and that's why you were late, but we both know that's not true. So Matt, if you could, one, congratulations.
Thank you.
Two, if you could just tell us a little brief about your ETF history and now your crypto history, and then we're going to go to Greg to let him finish the other question. So welcome
amazing.
aboard and congratulations.
Well, thank you, Mike. Good to see everyone. For those who don't know me, Matt Hogan, CIO of Bitwise Asset Management. My ETF history, I spent about 12, 13, 14 years in the ETF industry full-time, working at ETF.com, helped build the first ETF rating system in the world, first ETF data system, Inside ETFs conference, and then eventually sold that business And after the earnout, looked around for the next great disruptive industry that was going to do wonderful things for the world, and settled on crypto. So since February of 2018, I've been the CIO of Bitwise Asset Management. Bitwise, one of the larger crypto asset managers in the world, over $1 billion in assets today. Best known for our crypto index fund, the largest and first crypto index fund. But we also offer a DeFi index fund and are working on a Bitcoin ETF, among other projects. So that's me in a nutshell.
Wonderful. You're having a great night. So we'll come back to you here in just a minute. We'll let you get situated. Greg, let's keep the conversation going on the structuring. And what are the commonalities that you've seen from the evolution of ETFs to the move towards crypto? What's common? What are we solving? What are you doing at Osprey?
A lot of questions baked in there. And hey, congrats, Matt. Good to see you. Well deserved. I was thinking about this question. For me, the attraction to crypto has been just the opportunity to innovate and be entrepreneurial. I heard Matt say earlier that the growth is most of the growth is still ahead of us in the ETF space, and I can see that. I can absolutely see that. I think perhaps my own calling is to be a little earlier in the cycle. So it seems like ETFs are well on their way and crypto is just kind of getting started. So that's what's attracted me to the space. And there's just so much to learn about all the technologies that are being developed. As to problems that it's solving, I think one way of putting it is that ETFs, I think, have reduced friction. Right, they reduced friction in terms of taxes versus mutual funds. They've certainly brought in spreads overall. So they're an innovation in that sense, and I think crypto is doing that as well. It's reducing a different kind of friction, the friction that comes with the trust that's required in a lot of financial exchanges. The spreads that are required in a lot of property transfers, and to the point of tokenization, I agree. There's just a whole world that's going to open up there that I personally didn't see. For example, NFTs coming. I mean I wouldn't have thought of that, right? And when I first found out about it, I thought, wow, that's great. You get the royalties from that. When LeBron James dunked the ball. Well, not so much. It's just actually like a baseball card, right? Or that's at least one of the applications. So there are things out there that I think will surprise all of us. And the space is just so difficult to keep up with. The learning curve is so steep, but it is live TV, isn't it? Okay, sorry. But there is just so much more to go that I think this is a great panel because there are commonalities between the ethos of what has driven the ETF industry and what's driving the innovation, at least on the financial product side of crypto as well. So it's interesting to watch these two worlds converge, and maybe, spoiler alert, that's one of the reasons why some of us have gone, to the other side.
Got it. It's funny when you say, like, who would have thought of it? Our children. Our children, like when over spring break, I remember asking my daughter, my 11-year-old daughter, about what's a Beeple and what's an NFT. And as soon as she read that it was digital art, she told me she saw digital art using some Google app, and it totally made sense to her. And I think back to when my son had V-Bucks. So, I think we'll jump ahead on to the next question because it kind of comes from this, and we'll start with Matt, which is, what is the adoption curve going to be like, right? We're coming up on almost 30 years into the ETF market, and we're still trying to catch mutual funds. What do you think? What do you think the adoption curve is going to be like, right? Like, the regulators haven't been too helpful yet. So, get it, Matt. Tell me how quickly are the rest of us going to the dark side?
We're in a really exciting moment for that question, Mike. I think of it like Jeffrey Moore's Crossing the Chasm, which is, sort of the classic way technologies are adopted, and how there's always an early adopter market, and then there's a mainstream market. And there's this gap called the chasm where technologies go to die. So many technologies never make it out of that chasm because they can't they can't be perfect enough to have mainstream adoption. I think of VR as a good example of that. What's really exciting about crypto right now is it's crossing that chasm. That's what you've seen over the past year with all these institutions moving into the space. A way to conceive of that is it going from this early adopter market to the mainstream market. Now it's going to take a decade to penetrate all of the mainstream market, but it's many multiples larger than the market that exists today. It's still extremely early. I think the curve is going to be extremely fast. And I would add one more thing. People undercount the degree or the pace of innovation in the crypto market and what sort of permissionless innovation can do in terms of speeding that adoption. The evolution of the DeFi market, for instance, is one example where it's evolving much quicker than I think anyone anticipated. So I think the curve of adoption is going to be breathtaking. I think we're entering sort of a step function phase, and it's really exciting.
Wonderful. Abner, you're dealing with the pipes. So what are you seeing in that curve, right? I heard you say 10 years and all the bonds go on the blockchain. Is it going to take that long, or could it go faster? Or what do you think?
You know, it's funny. Money moves very slowly, but I think it can go. You know, innovation moves fast. We are actually, Gemini is going to be coming out with a great report on the state of U.S. crypto in coming days, and you'll read in there that like less than 15% of U.S. investors have crypto investments today, and that is telling. It's an important statistic, right? If we look at building good portfolios, we think, and you look at the numbers by some of the outfits that are doing research on adding cryptocurrencies into portfolios. Matt, I'm sure you probably have some great research on this. I am sure that if you look over the last 10 years, 1 year returns have been much better if you've had a small percentage of crypto, somewhere between 1% and 5% in your portfolio over that time, right? So if you think about the adoption curve, right? You go back to the early days of ETFs, and we're going to do the same thing with crypto that we had to do with ETFs. Educate, 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 right? The next 10 years, I'm probably going to write 3 books on crypto for institutional investors and how they can implement crypto into their portfolio, the best ways to build portfolios around the DeFi space. I think we'll be sitting here in 5 years, and Matt will be potentially winning the Lifetime Crypto Award, and Gemini will be winning the 2021 award for Best Service Provider for Crypto ETFs, and there's going to be lots of innovation and evolution coming up.
All right, Greg. So you've been successful at getting weird things into portfolios that nobody else could, right? VIX and things like that. So all of this requires infrastructure, requires pipes, it requires innovative ways to think about things. What do you see in terms of the adoption? Like, how fast do you think it's going to occur?
I mean, it's occurring pretty quickly. I think the way I tend to view it is, and not surprisingly, I mean, it harmonizes with the bull and bear cycles of crypto itself, right? So we're in like the 4th wave, let's say, if you just look at Bitcoin, and I sort of caught the tail end of the 2013 wave, lived through the whole 2017 wave, and then the one now, and just with each of these, the people that sort of come out of the woodwork, I've been pleasantly surprised at the broadening of institutional adoption to include corporations and insurance companies and all manner of institutional investors that were very much, I think, in large measure on the sidelines the last time around. So it is happening, but as you alluded to, the rails need to be built, right? And as you also just flatly pointed out, the regulators haven't, moved forward in the U.S. anyways, with respect to an ETF. Everyone's obviously very curious what's going to happen with Gary Gensler at the SEC. You have 52 ETFs, Bitcoin ETF filings by latest count, I think, give or take. But we'll see, because that really only solves a tiny problem. Okay, now maybe we have a Bitcoin ETF or 12. But what about everything else? So that part still remains a little bit murky to me. So in the meantime, I think there are, those of us that are trying to figure out ways to deliver exposure to people in consumable fashion in a way that they can actually get it into their portfolios and do so with as much kind of ease of use, cost efficiency, transparency as possible. So I think those of us, some of us on this call and on this panel, and lots of people in the audience are actually working to build those rails. And so, to a certain extent, we can define that future. We can't control the regulators, but there is demand clearly, and there are workers building stuff. It's just really fascinating, I think, to watch how it all kind of evolves. But the pace is picking up.
Wonderful. So let's stay on this regulation idea, right? We're an industry, both in the ETFs and crypto, that are literally begging for clearer regulation, right? How many industries beg for regulation? I mean, I remember 3 years ago when we launched Block, we weren't even allowed to use the blockchain word, right? And from what I can see, they're probably still making that a headache, because I see all the clones filing now and they're not using the blockchain word either. Abner, I heard you say you're one of the most regulated entities in the world. What do you see happening with regulation as it pertains to crypto and the ability to get that into products that people can access in their traditional financial world?
Look, we believe that regulation adds clarity, right? So clarity for accounting purposes, clarity for investment purposes, and we are, right? So Tyler and Cameron mentioned during their talk that they think about what we should do and not what we can do, and we make sure that we're asking the regulators first instead of asking for forgiveness, right? We're asking for permission and not for forgiveness. And I think that the industry, the more regulatory scrutiny we get, the more adoptable this is by the large institutions that control huge swaths of money, right? So it's one thing to be servicing small investors, and we want to do that, and they control a tremendous amount of wealth in the country, but also a lot of wealth is managed by large institutions with boards and compliance departments and risk departments, and all of them require clear regulations in order for them to function. And so we support that, so that we can, again, expand the usage of crypto because we think it's good for investors.
Wonderful. And with that regulation also comes that education and getting the message out. So Matt, I want to hear what you've seen with regulation, because it's not just about knowing what they are, it's about communicating to RIAs what they are so they can actually buy it. I mean, we all know what Tyrone's doing with OnRamp and Eric. And I know another big voice there have been you and Hunter at Bitwise. So, what are you hearing about regulation, and what are RIAs telling to you about regulation?
Well, I think an important thing about regulation, which I think is not perfectly understood, and we try to do a lot of educating on this, is that we've come a long way. We're a lot more regulated today than we were 2, 3, 4, 5, 6 years ago. We have clear regulations around Bitcoin and Ethereum security status. We have applications of the travel rule from an AML KYC perspective. And you don't need to take my word for it. Without these regulations, we wouldn't have MassMutual putting $100 million of Bitcoin on its balance sheet. It just wouldn't happen. And so we have made a huge stride from a regulatory perspective. And part of what we do is talk to investors, talk to advisors about that regulatory progress. Because when we do surveys of advisors, one of their biggest concerns is that it's an unregulated cowboy industry. And that's actually no longer true. Now, we do talk about the regulatory risks that exist in the future, but those risks have changed from sort of binary risks to modulation risks. A few years ago, I think there were binary regulatory risks that could have set back the crypto industry a long way, and we managed to get through those and into a much stronger place. Now there's a question of how crypto evolves and whether it's on a 70% trajectile or a 50% trajectile from a development perspective. And so we talk about those risks too. But the most important thing is it is a regulated industry, and we've made a lot of progress on regulation. And so we try to explain where we really are as opposed to where people are thinking that the industry is.
Wonderful. So we only got about 3 minutes left. So Greg, I think you covered enough regulation. I'm going to come to you and then Abner and then Matt with our final question, which is, what is the greatest threat and opportunity in this crypto market? So you get 2 answers to 1 question, or 2 questions for 1 answer. I don't know. You figure it out. Greg?
So to me, the greatest opportunity is just to build a reliable, transparent, honest effort at creating digital asset investments so that investors and their advisors can be educated and feel comfortable with the asset class. It is basically a foreign country to most investors. I mean, completely foreign. There's foreign countries where you speak the language. Like I lived in London and I lived in Australia. It's still a foreign country. There's other foreign countries you don't speak the language at all. And I think crypto is that. So we have to be a force for education. And I think there's a lot of value to be created there. As far as threats, I think the threats are really from a regulatory perspective. I agree with Matt. They used to be more binary. Now they're just more a question of modulation. So the biggest threat is regulation.
Abner?
Look, I said this the other night. I think there are, there's threats are sort of, it's overstating anything. There is no threat to the industry. This will be an industry and it will continue to grow for a while. What we're hoping for and what I think will help with it, almost like the opportunity, is good regulation, thoughtful regulation, and that opens the doors to investors in a variety of ways. Like, look, Gemini, if you think about the way the industry works, Gemini is a very unique firm, right? We are a custodian, an exchange, a trading firm, a clearing firm, all in one firm. That's hard to think about when you look at the traditional financial world. We are, BlackRock, Bank of New York Mellon, the New York Stock Exchange, all wrapped up into one. And you need to think about how good that can be for investors, right? You're removing levels of profit margins from different firms. You're streamlining operations. These are all great things for investors, and that's what we're trying to build towards. And that's going to require a lot of thoughtful regulation to open up that opportunity to enable funds to flow into the space. And then we haven't even seen what's coming yet, right? Like, if you imagined when Jeff Bezos left D.E. Shaw and opened his online bookshop, if you really thought he was going to create Amazon at that point, I mean, you were an amazing person, but nobody else really thought that, right? Everybody tried to talk him out of leaving, right? It's the same thing with the crypto space right now, right? We cannot even imagine what we're going to see through tokenization, through the use of NFTs, through further development of the space. And I think
okay. I'm with you. We got to give Mr. Lifetime Achievement the final word here, though. So Matt Hogan.
Well, the good news, Mike, is I agree with both Greg and Dave that the sort of regulatory question is both an opportunity and a threat. I will say for the people on this call, in terms of opportunity, you have a really unique thing in crypto that doesn't exist in a meaningful way in most asset classes, which is sort of the opportunity for educational alpha. People are anchored on where crypto was a few years ago, and they don't understand what crypto is today. They don't understand our regulatory progress. They don't understand the institutional quality of the market. They don't understand the kind of services that Abner and others are providing into this market. And so people have one of the rarest opportunities, which is educational alpha, to be ahead of where the market is going to be just by evaluating for what it is today, let alone, as Dave mentioned, all the things we can't even imagine. So that's my parting thought.
Wonderful. We're over time. We're going to sign off here. I want to thank Spark Network. I want to thank ETF.com. Congratulations to all the winners. And thank you, panelists, and have a wonderful day.